The key reasons why you often lose money on stock trades. Many individuals frequently find themselves losing money on their stock trades. However, it is important to note that this is not necessarily due to investing in bad stocks. Instead, the primary reason for these losses is often a lack of proper strategy and decision-making. In the next few minutes, we will discuss the 3 key factors that contribute to these losses and provide insights on how to improve your investment approach. 1. Lack of a system to determine investment value. One of the main reasons for losing money on stock trades is the absence of a systematic approach to evaluate the investment's value. Without a reliable system in place, it becomes challenging to determine whether a stock is a good investment or not. Merely hearing about a stock and buying it without conducting thorough research can lead to poor investment decisions. To increase your chances of success, it is crucial to develop a system that helps you identify the value of a stock. This system should consider various factors such as the company's financial health, growth prospects, competitive advantage, and industry trends. By analyzing these aspects, you can make informed decisions and avoid investing in overvalued or underperforming stocks. 2. Inability to identify the right time to invest. Timing plays a crucial role in stock market investments. Even if a stock has excellent long-term potential, it may not be the right time to invest in it. Failing to identify the optimal entry point can result in buying stocks when they are overvalued, leading to potential losses. To address this issue, it is essential to develop a method for determining the right time to invest in a particular stock. This can involve analyzing technical indicators, market trends, and investor sentiment. By understanding the stock's current valuation and market conditions, you can make more strategic investment decisions. 3. Absence of risk mitigation strategies. Another significant factor contributing to losses in stock trading is the lack of risk mitigation strategies. Without predetermined exit points and protective measures, investors are vulnerable to substantial losses when the market moves against their positions. To protect yourself from significant losses, it is crucial to establish risk management techniques. This can include setting stop-loss orders, which automatically sell a stock if it reaches a certain price level, limiting potential losses. Additionally, diversifying your portfolio across different sectors and asset classes can help mitigate risk. Conclusion: losing money on stock trades is often a result of inadequate investment strategies rather than investing in bad stocks. By implementing a systematic approach to evaluate investment value, identifying the right time to invest, and incorporating risk mitigation strategies, you can improve your chances of success in the stock market. Remember, investing in stocks requires careful analysis and decision-making, and a well-defined investment plan can significantly enhance your overall performance.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.